In this video, I'm going to discuss about make or buy decision. This is also known as produce or purchase decision. Make or buy decision technique is a decision making process that companies go through to determine whether to produce goods or services in-house or to outsource them from external suppliers. For the calculation of costs, relevant cost method is used, which means only relevant costs will be considered to make decisions. We discussed about relevant costing. If you do not have an understanding of what is relevant costing, please make sure to watch that video before you continue this video. Variable costs and specific fixed costs will be considered for the cost of manufacturing, and general fixed costs will be ignored. We already know this. We only consider future incremental cash flows under relevant costing. All the other costs will be ignored. Both financial and non-financial factors should be considered when making the final decision. It is very important thing to notice that when it comes to management accounting, we should always consider both financial and non-financial factors before we make a decision. Just because an option is cost effective, we do not select that option solely based on the financial factors. We should always consider the non-financial factors as well. Simply make or buy decision is where companies have to make a decision whether to make components or products in-house or buy it from outside suppliers. In order to make a decision, we have to consider the relevant costs for making the components or goods in-house. Then we have to compare that costs with the buy-in price from the outside suppliers. Companies have to use this technique when there are limiting resources or limiting factors. We discussed this topic earlier. When there are limiting factors, companies cannot fulfill the market demand. So then they have to make a decision what components or products to make in-house and what components of products they have to buy from outside suppliers. This is because when there are limiting factors or limiting resources. Now let's do this example so you can understand the basic of make or buy decision. Company A is manufacturing cars. They are considering whether to manufacture engines in-house or buy them from an outside supplier for $20,000. The following costs are estimated for in-house production. What option will be the cost effective? If you see the term cost effective, which means we are going to consider the financial factors because cost is a financial aspect. Now let's understand the question. There is a company which is manufacturing cars. Now they have to make a decision whether to manufacture engines for their cars in-house or to buy it from outside suppliers for 20,000. In order to do that, we have to have the costs for in-house production. These are the costs they have given for in-house production per engine. So per engine, raw material cost is 11,000, labor cost is 1,200, variable overhead cost is $1,000, specific fixed cost is 2,300, and they have given the apportioned fixed cost of 8,000. Now what we have to do is we have to identify what are the relevant costs for the production of engines in-house. So all these costs are relevant because these are future incremental cash flows. In other words, they are relevant costs. We do not consider the apportioned fixed cost amount because this is an irrelevant cost. So now let's calculate what is the total cost that will be incurred if they decide to produce engines in-house. The total cost is the summation of these amounts. So the total relevant cost is $15,500. This means if the company decides to manufacture engines in-house, the relevant cost per engine is 15,500. Now we have to make a decision whether to manufacture the engines in-house or buy it from an outside supplier. So the buy-in price they have given 20,000. which means this is the price the company has to pay if they decides to buy it from outside suppliers. As now you can see, there is a difference between these two values. The buy-in price is higher than the cost of production in in-house, which means there is a saving if the company decides to manufacture the engines in-house. So now let's calculate the saving. 20,000 minus 15,500, 4,500. This is the saving if the company decides to manufacture the engines in-house. So based on the financial factors, company A can decide to manufacture the engines in-house because it will be cheaper than buying it from outside suppliers. This is the process of deciding whether to make or buy a component or product. If the cost of production is lower than the buy-in price, we can consider making that component or good in-house. If the buy-in price is lower than the cost of production in-house, we can make the decision to buy. Now let's do this example. Company X uses material Q to make components A, B and C. Material Q is a limited resource of 2000 kilograms. Which component should company consider to buy instead of making in-house? First of all, let's calculate whether the material Q is in short supply or not. In the exam, if they are directly telling there is a limiting factor, you don't have to do this. You can simply start the calculation. Just to refresh the theory of limiting factor analysis, now let's calculate and see whether the material Q is limited or not. So how we can do this? They have given the demand for each component and they have given the material Q cost per unit. As you can see, they have given the material cost per kilogram. Now what we have to do is we have to find how many kilograms of material Q is needed for each component. We can simply divide this value by 5. This will give us the amount of kilogram which is needed to produce each component. For component A, 2 kilograms of material Q is needed. For component B, 3 kilograms of material Q is needed. For component C, 1 kilogram of material Q is needed. Now let's calculate the total amount of material Q is needed to meet the demand for each component. We can simply add these values together as we did in limiting factor analysis. So this is equal to 300. 300 is the demand for component A. 2 is the amount of kilograms that is needed to produce 1 unit of component A. This is for component B. This is for component C. This is equal to 2550 kilograms. Do we have 2550 kilograms of material Q? No, we don't. Look at the data given here. We only have 2000 kilograms. This means material Q is a limited resource. Now what we have to do is we have to calculate the savings per limiting factor. These are the costs we have to consider under relevant costing. These are the costs that will be incurred to produce the components in-house. These are variable costs. For component A, buy-in price is 17 minus relevant cost to produce 10 plus 5. This is equal to $2. For component B, the buy-in price is 22 minus the relevant cost to produce 15 plus 3. This is 15. This is equal to $4. For component C, the buy-in price is 17. The relevant cost to produce is 5 plus 8. This is equal to $4. Now let's calculate the savings per limiting factor. So what we have to do is we have to divide this value by the limiting factor. For component A, 2 kilograms of material Q is needed. For component B, 3 kilograms of material Q is needed. For component C, 1 kilogram of material is needed. So this is equal to $1 per limiting factor. This is equal to $1.3 per limiting factor. This is equal to $4 per limiting factor. So now what we have to do is we have to rank these values. Highest saving per limiting factor will be ranked number 1. So component C is the highest. Then component B. Then component A. And now let's calculate and see what components we have to buy from outside and how many components we have to buy. So let's give the priority to number 1, which is component C. We are going to make component C in-house. The demand is 600. 1 kilogram of material Q is needed to produce single unit of component C. So 600 kilograms of material Q is going to be needed to meet the demand for component C. We have 2000 kilograms of material Q and we are going to use 600 kilograms. So the company is going to left with 1400 kilograms of material Q. Then we give the priority to component B. The demand for component B is 450 multiplied by 3 kilograms, which is equal to 1350 kilograms. So now the company had left with 1400 kilograms of material Q. Now they are going to use 1350 kilograms in order to meet the demand for component A. This 50 kilograms is not going to be enough. Now let's calculate how many component A's can be produced with these 50 kilograms. Now let's reverse calculate it. We have 50 kilograms. Each component A uses 2 kilograms of material Q. This is the number of component A's we are going to produce. This is equal to 50 divided by 2, 25. This means we can still make 25 component A's using the 50 kilograms of material Q. Now we have to buy the rest of the component A from outside supplier. The demand for component A is 300. We can still produce 25. This means 275 component A we have to buy from outside. So as a summary, we can make the total number of component C, component B, and we can still make 25 of component A. The rest of the component A we have to buy it from outside suppliers because the company does not have enough material Q. I hope now you understand how to use the limiting factor analysis and make or buy decision. Now let's discuss about the non-financial factors to consider. The company's level of expertise in producing the goods or services versus the expertise of potential external suppliers. Quality. The quality of goods or services produced in-house versus the quality of those produced by external suppliers. Capacity. The company's capacity to produce the required goods or services versus the capacity of external suppliers. Time. The time required to produce the goods or services in-house versus the time required to outsource them. Strategic importance. The strategic importance of the goods or services to the company's operations and whether outsourcing them could result in the loss of control or intellectual property. When it comes to decision making under management accounting, we have to consider both financial and non-financial factors. Thank you for watching. See you in the next video.